Hey traders, this is Ron at Market Tamer. Happy Hump Day, happy Wednesday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. All right, markets got hit today. SPY was down 1.9%. You can see it lost over 50 points on the SPX. The target now are the lows right down here, this 282 up into maybe 280. It's sort of a range. You could say 284, 282. This is what we talked about yesterday and the days prior, how we were hitting the 50-day in orange, hitting it, probing, and then we gap higher, close lower. That was a bad sign walking into today. Gap lower, closed the lower end of the range. Volume did pick up. If we take a look at the Dow, ETF, the diamond, similar, 1.95%. Finished off the lows, but it too closed below the 50-day. Targets back down here, 256, 254. We take a look at the Qs. We can see volume picked up here too. It lost 1.89%. 182 down to 180 is probably the window we're shooting for, so there may be 4 points here. Overall, bears, just like I said yesterday, they get the technical edge, and today it was boom. It added to that. The VIX gained 10%. Now, I don't like to go up and use previous highs as targets. What I prefer to do is to see how many days in a row it might run. And right now, we only have 2 days. So if I had to guess, it looks like there's another big VIX spike coming, maybe one more, and then a third, but then a reversal in the markets. So what does that mean walking into this week, the rest of this week, Thursday, Friday? Probably more selling. Doesn't mean we have to go straight down. It could be a pause day. But right now, we want to watch these levels. If this 282 to 284-ish can't hold on the S&P, then it's 275. If 275 can't hold, then it's down here. Getting way ahead of ourselves doesn't mean we're going to get there. There's lots of fear-mongering going on in the media and all kinds of stuff, just like they did back in December. We'll just take it as it goes. Right now, the bears have the edge on all the majors. If we move into XLF, which is the banks, they were down 2+%. Similar story, 26 here is the target. We're below the 50 days, so you go back down to the previous lows. What's interesting about $26, what is that? Yeah, end of August, middle of August. You come over here, you have the end of May. That's a good line in the sand. That's the target right now, about 85 cents lower, so another 2+%. Get below there, we come here, and then it's all the way down here. You sort of get the idea. Here, the transports down 2.3%. They're almost down at 175. Now, these guys have been weaker already, but below 175, all the way down here would be the target. Then we look at the semis, last of the 3 ETFs. Check this out. They're basically just barely above their 50 days. These guys did not get hit as hard over the past couple days. They're still holding in there, but if we do get below the 50-day, we come right back down here towards this 109, 110 area. Now, how goes Apple? How goes the market? Vice versa. Apple was down 2.76%, but it's still above the 20-day EMA, showing a lot of strength here. If it gets below the red line, go to the orange institutional line. How about Google? Down 2.5%, 31 bucks. We got through the 50-day, and we actually gap below it. And this is so interesting because it happened with gold the other day. When a stock busts through a major support level via a gap, it can often be a great potential day trade type opportunity in a paper trading account, of course. But look at that. We opened, let me just move the mouse in here. So we opened at 1196.50, and then we went all the way back down to 1177. Nice little short intraday gain there. So keep an eye on that. You'll be amazed how often this happens. We gap below, and then the floodgates open. How about Amazon? Down 25 bucks. It's been weak. It hasn't been able to get above the 50-day even during September. Right now, the target's right around 1,700. Then we go down to 1,600. And then Facebook didn't have a real bad day, down just under 1%. But the target right now is about 160, 161. Back to those lows, the end of May, beginning of June, and February and March. Take a quick peek here at TLT. Bonds were only up about 0.5% today. They're still clinging on to that 50-day SMA in orange. Take a look at gold. You would think gold would be soaring, but it was only up 1%. Could not get over the 20-day EMA in red. Very interesting. It was over it. It was above it intraday. Couldn't hold it. So gold's still in a bit of a weak position here. The gold miners up 2%. They did not even get back up to their 20-day EMA. If I was trading one of these GDX as an example, anything below about 26.5, just picking around somewhat of a round number, that could open up the floodgates because now you have a bottom here, a bottom here. If we fail and roll over here or get back up here and roll over again, that 26.50 is going to be technically key. So that's it. bears have the edge walking into this week. Tomorrow's Thursday, maybe another potentially big move down, or at least it could set up for that. And then Friday, a bit of a short covering rally, but we'll see. Right now, bears have the edge. Wish you guys all the best. I'll catch you in the next video.